welcome everybody to the webinar. I know it's Friday, so hopefully everybody is done for the day after this one. And this is your last session for the day. Today we have with us Ryan Webster, who is the founder partner of Tabl'eau and also an expert in the finance space. He's a multidisciplined, versatile entrepreneur and finance executive. He is one of those folks who has this rare combination of both strategic focus, being a generalist, managing an early stage company, as well as large corporation, and also core finance, which means he has an entire range of expertise from corporate strategy, corporate development, corporate finance, investor relations, and all of the other things required for financial reporting, control, etc. He's led and executed over $2 billion in corporate M&A transactions during his career. It's a billion with a B. He's been a partner at Tabl'eau Filtered Water since 2019, and he's been leading the company's strategy, strategic planning, finance, and operations. As a CFA and CPA, he has a proven track record of building high-performing finance teams, securing significant credit facilities, and delivering impactful financial strategies across diverse industries. Thank you, Ryan. We are so glad to have you here as we do our first session on private credit and introduce to our potential investors and people who are looking to learn more about private credit as an asset class overall. And we couldn't have a better guest on our webinar than you.
Awesome. Thank you, Khushboo. Great to be on here and look forward to the conversation.
Absolutely. And as you all know, I am Khushboo Jha, the CEO and founder of BuyProperly. We are a platform for investing in alternatives. We believe everybody should be able to invest in alternatives and not only the large institutions, banks, and big family offices. And so with that goal in mind, we have on our platform residential investments in real estate, commercial, as well as private credit. We have mortgage investments, and now we also have Tabl'eau, which, by the way, we have sent out email to everybody that is actually going to be an RRSP investment. So this is our platform's first RRSP investment, which is awesome. I'm very excited about opening up RRSP. I don't know, my RRSP never does well, Ryan. No matter how much I tweak it, it just seems to always not do great. So I hope I can leverage that.
I'm in a similar boat, and yeah, this is definitely a healthy yield for having in a registered account.
Yes. So with that, I would want to kick off some content. This is sorry, I think I need to buy a new laptop in Black Friday sale because my laptop isn't responding right now. Hang on. Well, let me try to share this. Okay, I think I got it this time. So we as a platform obviously support all of these asset classes, either in the form of the investment products that come on the platform or as a software. And today we are focusing on private credit. What is private credit? There's growing demand, provides defensive income. It's an important component of diversification, and those are things everybody knows. But what really, in jargon or finance terms, learning a little bit from you, Ryan, what is private credit? We'll talk about why invest in private credit at all. Like, why should we bother? There's real estate, and the stock market is always seeming to have a bull run. For a long time, it seems to be always in a bull run mode. How do you evaluate a good credit deal? It's net new. So even for people like me who are new to alternate investing, because the access to such deals is very limited to regular folks, there's also not enough experience or enough education and knowledge on how to pick the wheat from the chaff, so to say. And so that's another piece that we would like to share. And finally, would like to talk about Tabl'eau, which I believe is a great deal based on the above three factors. Once in a while, we get such amazing deals that I am very excited about talking about them. So this is one of those. But before we get into details, I would like to put in a disclaimer. We are not providing financial advice or tax advice or asset allocation advice. We are not financial advisors. And you will have to speak to your own advisor. Everything here is our personal opinions, and there's no recommendation of investing or soliciting for any securities on this webinar. With that, this is my understanding of private credit. Private credit and private debt are often used interchangeably, but maybe there's a little bit of a nuance. But private credit in general is anything that's from a non-bank lender, such as an asset manager or a corporate borrower, and between a non-bank lender and a borrower. So we are the non-bank lender. We're not licensed to be a financial institution of any kind. And Ryan's company is the borrower in the case of Tabl'eau. Most common debt example that everybody's familiar with is mortgages, typically with a bank, mostly with a bank, although there are a lot of private lenders in that space as well. And so that's a regulated entity and different. But when you do a mortgage, then that's private. Or through a MIC, you're doing private lending, then that's a private debt. There are 4 big buckets that I have classified private credit into. There's the senior or direct lending. There's the junior or mezzanine. There are obviously lots of subclasses, but these are the big different ones. There is distressed debt, and there's specialty finance, which is things like equipment leasing and so on. Anything you would like to add to that, Ryan, about the asset classes?
No, I think to your point, I think there's a lot of nuance in. I mean, you could probably expand that into 20 different categories, but those 4 categories capture, I think, the broad strokes of it all for sure.
Yeah, and this, from my perspective, or what I believe, is why people go to the market. One, greater closing certainty. I mean, I have a mortgage example where we had a partnership with a well-known financial institution in Canada. We went through months of partnership conversation, and then when it was time to actually close on our commercial properties, they were like, oh, 20 days is too soon or too quick for us. We take at least 6 to 8 weeks, and we would have lost the deal without the private market, because the big financial institution, in spite of all the conversation, was like, they have to follow a process. And so the closing certainty is higher in the case of private lender, faster also, as I know from experience. There are less fine prints in general. There's more clarity, transparency, less boilerplate temples. There's greater confidentiality. This is something that I, as a company, have encountered, where sometimes I'm not sure I would want people to know I'm raising debt, especially I don't want my competitors to know that I'm raising debt, or even if we need cash. That's in the market may not be the best signaling. Somebody can take advantage of my financial context. And then obviously private lenders are often less bound by what has been done is how it will be done. So there is room for sometimes greater leverage as well. So those are some of the things that I would like to add. This is hypothetically how the different buckets of private credit that we just talked about sort of maps out on the risk return profile. And this wasn't made up by Khushboo or Khushboo's team. This is based on Carlyle's classification of these classes. So a little more credible source, where a junior debt is basically a second layer debt. So there is a debt that will be paid before yours, which is why you're a junior, in simple terms, and is obviously higher return because it's higher risk also. Senior debt will have the lowest return and the lowest risk. Distressed debt, as the name suggests, is a distressed situation, and specialty finance is equipment leasing. Both of them obviously have higher risk profile, just because, so in the case of specialty finance, it's the uniqueness of the asset or the uniqueness of the context that lends it to be not a very fungible resource. Like it's not like every company is exactly the same. So this loan or that loan, they're all the same. It doesn't matter, very standardized. And distressed debt is also unique because every distress situation is different, has different liens, terms, conditions, and issues. And in any risk return profile, it's obviously the creditworthiness of the borrower or the company, the seniority where you are in that whole stack, and the interest rate, whether it's fixed or floating. As we've seen in the last few years, floating rates was making a lot of money for lenders. However, what people forget is obviously the interest rates, when they go up very high, the chances of a borrower getting into great financial stress and therefore not actually paying back your principal becomes higher. Because yeah, you may extract extra rent in the form of interest, but if the business shuts down, then you are worse off. So there's a trade-off between those three, and that's what kind of determines this. Question to you, Ryan. Would you like to add more to the risk return profile, and where does Tabl'eau fit in this one?
So Tabl'eau definitely fits in between the, I mean, from a security perspective, it is a senior secured facility, but I would say on the actual return, the interest rate, it sits in the middle of the junior and senior on that graph. So we recognize, just given the stage of the life cycle of the company and where we are in our journey, and the opportunity ahead, that paying a decent coupon was something that we're able to do and very willing to do in order to get this moving. So definitely, I would say in the middle of that junior debt mezzanine and senior debt lending bubbles that are on that graph.
You are a veteran finance executive yourself, Ryan. And so from your perspective, as you have, I'm sure you've looked at this from the other side of the table a lot. What have been some of the risk return factors that you would have looked at as a
I think it's important within the context for Tabl'eau to look at relatively small company private lending, private credit deals. And I think the thing that is important is looking at a private credit opportunity with an early stage company versus an equity opportunity, like an angel or even up to a Series A opportunity with a smaller company. You definitely want to make sure that it is not pre-revenue, that there is existing revenue, and that you're not lending against an idea, you're actually lending against a business, which is definitely the case in Tabl'eau. But also that the ability to service the debt is based off of proven financials, that the margins are sufficient, that the pipeline is sufficient, that the projections that result in being able to service that debt are based off of something that is proven in the market effectively, right? So that's what really drives the difference between seeking higher risk reward equity type investing that you'll find with most early stage companies versus this private credit deal that we have for Tabl'eau, which is really based off of the fact that we have a very strong pipeline with a strong portfolio of companies and brands, but also that it's a proven model, and we are generating revenue and generating margin at the moment.
Right. Yeah. From our platform perspective, given we have some customers, investors joining the webinar, we at BuyProperly are a curated platform, which means not every deal that comes our way actually goes live. And it's also not based on whether they will pay us to put it on the platform. I think we do take customer trust very highly. And from day one, I think we've been very rigorous in due diligence. We are looking at both macroeconomic factors as well as the specific asset company factor to it. So we ourselves look at a lot of things, including the ability to service debt, the cash flow, the location, what are our options to get out. And so we have a pretty rigorous checks and balances on that side. So the macroeconomics would determine, are we going to put money in a hotel deal in COVID? Probably not. and for a long time not, or an office space, not even touch it with a pole, 10 feet pole. So those were strategic choices, and based on the analyses of the industry, we have presence in storage facilities. At the right time, we entered the storage boom, although I don't think it has totally gone away. And so factoring in macroeconomic trends, but also at an individual asset level, we do run analyses, and that's a combination of legal checks, KYC, know your sponsor, as well as the project level. So if we as a platform are unsure of anything, sometimes it may be a perfectly credit-worthy borrower, but we won't have the data to prove that, then we probably not go for it. Because again, even though we are not an advisory platform, we do take customer interest as a very, very high priority to make sure we're not Kijiji. We are closer to an Amazon, which curates what goes there versus a Kijiji. So we want to make sure that we value people's hard-earned post-tax money in a lot of cases. I've been there personally, and if I can't put my money into it, I don't know if I would want others to take a chance and risk it. So we stay.
Trust is everything.
Trust is everything.
Yeah.
Yes, and as a platform, when you started as a startup, Brian, you have to build that credibility. You have to earn the credibility, and the credibility comes with making sure you have a rigorous process. So I don't have a ton of slides. This is my last one. While we are talking about private credit, I wanted to put the counterpoint to it. The idea is not to put all your money into private credit. Private credit is great. Private credit is awesome. It should be part of your portfolio, but not all of your portfolio. And that's true for alternatives overall. So even though we are an alternatives platform, and I would love it if we get a lot of money, I still wouldn't want the end customers to put in all of their portfolio, a lot of their portfolio. I mean, in the past, we've spoken about the Yale Endowment and Penn Endowment and Howard Endowment, and how they allocate as institutions close to 50% or sometimes more to private assets or private alternative assets. And that's okay. There are pension funds. They have 100 years to, they don't care about liquidity as much, very predictable. People die at the same rate every year. People retire at the same rate every year, predictable. We mere mortals, however, may or may not put a large chunk. And so this is a hypothetical illustration how a combination of stocks, bonds, and a private credit might impact your return and risk. So the idea is to create a more all-weather portfolio and not put everything in credit. So all that we said, wanted to use this as my last disclaimer slide. What I know, Ryan, we've been talking about Tabl'eau in the context of risk, but now I would want to open the floor to you to tell us a little more about Tabl'eau, how you guys started, and now we are open for RRSP, which is absolutely awesome. I have to reallocate my RRSP. It just doesn't make money. I don't know why. No matter what I try, no matter how much finance I apply to it, just doesn't move, and I would like it to make some money. So tell us more.
So I'll start with the company was founded. My partner Deb Belinsky founded the company just over 10 years ago, actually. Just seeing the problem that existed with existing single-use packaged and transported water, which was the go-to, 100% of the time, 10, 15, 20 years ago, but is still sadly the majority of the way people are experiencing water when they're outside of their house. And she just was, asking herself why that was the case, and whether there was a way that we could create a premium product and a standard kind of uniform product in multiple locations using source water. And so that was really the idea behind Tabl'eau. The way that it was built, though, was focusing on a premium aesthetic. So the design and intention behind every detail in the business, but also the quality of the product and the quality of the service. So everything that we've done has been purpose-built to fit within the higher end of the customer segments that we work in. And really, I mean, at its foundation, Tabl'eau is a sustainable water solutions company. So we filter, chill, and carbonate municipal water in order to create, basically a premium chilled, still or sparkling water you can pour unlimited out of your tap and eliminate all of the waste with some used packages, but also all of the carbon emissions associated with moving water around the world. We've been active. The current company has been active since the end of 2017, and we have a lot of traction within the who's who within the premium hospitality brands. We have multiple Four Seasons. We're a preferred partner of Accor Hotels, which owns Fairmont, Faena, Banyan Tree, SLS. They have, I think, 48 different brands under their brand family. We're in a JW Marriott, Ritz-Carlton, Montage. So really, have opened the doors and passed that initial brand review and been approved for certain properties, but are looking now at an opportunity to scale. Scale within these brands, scale geographically. So we operate all across North America at the moment, have some opportunities to grow significantly within North America, but as well as outside of North America for the first time. And importantly, expansion into some other verticals as well. We do work in offices currently. We have some tier 1 office clients at the moment, and it's a great amenity for the office, especially when employers are looking for a way to draw their employees back into the office. We also have, private clubs, restaurants, golf courses, there's fitness centers, there's all kinds of different use cases for our systems. Another big one, which is one we're just in a proof of concept phase at the moment, is residential, which you can imagine would be, multiples of the opportunity within hospitality, office, and restaurants. But we are laser focused on delivering on our current plan for the next, 3 to 4 years at least, which is very focused on those verticals and especially hospitality. There's a lot of opportunity within hotels and resorts, really from, first floor to top floor, whether it's in suite, on floor, lobby, pool, spa, every food and beverage location. There's so many different use cases at every property. The opportunity is very, very big, and we really have proven ourselves to be the go-to partner within our space for that, call it premium and luxury end of the sector.
Got it. And can you also tell us about your capital stack and and your raise of course, like what are the various elements you're raising? What's the total, the structure, who else is in contributing?
We have some small amounts of debt at the moment. I mean, we had the SEBA loan facility, which was extended through RBC, which like $35,000. We have some small shareholder loans at the moment as well, but really we are all equity funded to this point. This debt facility, what we're targeting is a $3 million US total facility. It's going to be a 36-month term. The interest rate is 15%. That'll be paid quarterly. It's going to be interest only for the first 18 months. So that 15%, quarterly, paid quarterly for the first 18 months. And then the subsequent 18 months will be principal and interest, so that the entire facility is paid back by the end of that 36-month term. The nice, sweetener on our particular deal is that there is a convertible feature. So the last dollar of principal, the lender will have the ability to convert to a preferred share in the company. And that preferred share is going to pay a fixed dividend of what equates to 3% of the original loan amount for 3 additional years. So you can imagine you get your capital back into your RRSP or your investment account. You can deploy that elsewhere, but meanwhile, you're going to continue to clip a 3% annual interest payment for 3 more years after the 36 months is over.
Got it. Cool. That's exciting. And do you have timelines into when you would like to close and how you're going to raise how are you going to deploy the fund that you're going to raise?
Yeah, I mean, we have the timeline. I mean, we're open at the moment. We have received some funds already, but we're hoping to have this all buttoned up before the end of the year. As far as deployment, I mean, I'm a very conservative person by nature. We have a plan to deploy about 60% of the funds within the first 18 months after receipt, and that is going to go to primarily securing equipment so that we can deploy it across North America, as well as building up our team. I mean, what's amazing about what we've achieved at Tabl'eau thus far is we don't actually have any salespeople. We never have. We've never done an outbound sales call in the history of our company.
Wow.
So we've built relationships with all of our clients through meeting them in select events. We're partnered with some very exclusive charities that have some high-end fundraising events that we're very happy to be invited to as a partner and offer our services. And being seen in those environments creates a validation within this segment that it's unbelievable, but we get inbounds from Four Seasons properties asking about our solutions that we've never met before, and it's that has led to a lot of opportunity now, to the point where a few weeks ago we were invited to the Four Seasons. We were at their international leadership conference where all the GMs from around the world convened for a few days, and it was only us and Lavazza Coffee who were invited into the building. Everybody else was Four Seasons staff. So it was, I would say that was a very it was a very good feeling to get that invitation from the GM of that property, and to see how proud he was to kind of showcase Tabl'eau in front of all the other GMs. But it really spoke to kind of what we had been trying to achieve all along, right? And so the pipeline is very strong. I mean, we're planning on, just to give a couple metrics, we have about 250 systems installed at the moment. We are planning on installing about 370 next year, so more than doubling our installed base next year. We have warm leads or signed proposals back for a pipeline that's more than a third of that for next year. So I'm very confident in our projections, and obviously those projections lead to the ability to service the facility that we have out there. So it's I think we're on very strong footing, and I'm very excited to get this closed and get our heads down and go and execute.
One question I had, when you close these contracts, can you talk a little bit about the contracts? Do you have to do it location by location, and then is it like an annual 3-year contract?
So they're 3-year contracts. We typically do location by location, especially within hospitality, because most hotels are run as independent corporations owned by usually pension funds or high net worth individuals. But that's not universal. We started work with a group of restaurants last year where we signed a contract for 10 locations right away. And that was one contract for multiple locations in multiple states. But the typical is one contract per location, but it would be upwards of 6 to 15 installations per property is what we're kind of targeting and looking to do with these locations now that we have these different use cases that we've proven out.
Got it.
Did I say, yeah, 36-month term. The other thing I think that is important, and I'm glad you brought that up, is that we do have also access to separate financing structure whereby we can basically sell forward the lease in order to be able to turn what would be 36 months of recurring revenue into an immediate receipt of cash in the front end when we sign that lease, as you can imagine, I'm sure, in an asset heavy business structure like ours, it's very capital intensive. Like the quicker we grow, the more equipment we have to buy, the more capital we have to outlay, right? Whereas now that we have this financing structure both in Canada and the US available to us, we're able to turn a signed lease into immediate cash, which we can use to pay for the equipment and then some, which, I mean, being able to match cash outflows and cash inflows is critical in being able to manage a treasury in a company, is, I'm sure you're all too aware. And so having access to that alongside with this debenture that we're raising at the moment is going to provide us with all the capital we need in order to go out and grow over the next 5 years and beyond.
Got it. Cool. Well, those are all my questions. On the RRSP side, sorry, one more, last one. On the RRSP side, could you speak to that a little bit? You're opening it up. It's open to all investors, from my understanding. Can we let people start tapping into that from next week?
We, from my
why
understanding,
that-
we are all set up to be able to start raising non-accredited and registered investor funds as of the beginning of next week. Like
That's fabulous.
Morning. I think we are right now, but I don't want to overcommit. We'll say the beginning of next week, and I think we'll definitely be safe.
Okay, that's absolutely fabulous and great news for our investors. We've actually been getting a lot of questions on, I'm not accredited, it is limited only to accredited, how can I get in? And over the years, we've also gotten a lot of queries on, can we open it up to RRSP? So we are very excited to open up RRSP structures to people.
The return structure of this financing in a registered account, I would say is definitely very, very interesting.
Yes.
So.
All right. So with that, I think I am done with all my questions. I'll just check with the audience if anybody has any questions. Otherwise, I think everybody might be in Friday mode. I definitely am. I think on Fridays, I just can't work beyond like 3 p.m. All other day I can work 16, 18 hours, whatever. Friday is my sacrosanct day.
Sadly, my to-do list still has a few things on it, but I'll get through them quick and be in Friday mode soon.
Well, looks like those were all the questions. So thank you, Ryan, for joining, and thank you everybody else for joining to learn more about the webinar. We will be posting more content about private credit. The Tabl'eau deal is already live on our platform, so I encourage you to go check it out. And if you have any questions, our team will be more than happy to answer. And Ryan will also be available to answer if you have a question specific to Ryan that we don't have information to answer. So thank you.
Thank you. Yeah, no, it was a pleasure. Thank you, Khushboo, for hosting, and yeah, have a great weekend.
Have a great weekend, everyone.
Awesome. All right. Thank you.
Bye.
Bye-bye.